Surprising might be the best way to describe this spring's real estate market. After last fall's deep freeze, when interest rates and inventory were shooting up, we were all wondering what the spring market would bring. Would there be a flood of inventory? Would the buyers walk away? Well, neither of those things happened. If you're wondering what's going on with the market these days, I'm going to take a few minutes to run through some national statistics courtesy of Altos Research and compare them to what we're seeing here in Montgomery County right now. So let's dive right in. First up is the national numbers for inventory courtesy of Altos Research. As you can see, we're sitting at 419,725 single-family homes for sale in the U.S. as of last Friday. Then you can see, comparing it to prior years, that inventory's been pretty flat, not much motion, and historically, the spring market, if you look at pre-COVID years, 17, 18, 19, you can see that inventory usually starts to move up in, February, March, depends on the year, the weather. If it's a warm winter, then the spring market tends to kick in a little earlier. But you can see that generally inventory starts to trend up into July, and then things start to taper off. This year, not so much. And last year, you can see that inventory started to move up, and it was at a steeper clip than historically was the case. This was driven by the fact that interest rates were moving up so quickly. A lot of sellers jumped into the market because they were worried what was going to happen, and at the same time, buyers were pulling back because they saw the cost of borrowing moving up. Now let's hop over to Montgomery County. Here you can see a chart for Montgomery County. These are active listings, all types of properties. I spread it out because it's a smaller statistical sampling in the county versus the country. I decided to use all property types just to show the seasonality. As you can see, you get the dips in the fall, and then things start to move up in the spring. Again, same here and there. So that's the normal seasonality. The beginnings and endings sort of vary depending on a lot of different variables. You can see the big dip and run up in 22, and then shallower motion now, but we haven't started really to see inventory move up dramatically in the spring yet. There's been a little motion, but it's been quite delayed versus the normal seasonal move. Now let's hop back to the national numbers. As you can see, there were 105,000 new listings the same week last year versus 77,000 this year. So that's a 26% decrease in terms of new merchandise coming on the market. I tried to sort of recreate that chart locally. It's not exactly the same, but the data is fairly similar. As you can see, this is listings absorbed versus new listings. The green line is new listings and the black line is listings absorbed. So new listings versus ones that come off the market. Not necessarily immediately, but on a week-by-week basis. And as you can see, in the spring, you tend to see the run-up, and the spread between these two gets to be a little wider. And that's pretty consistent because you have fresh inventory that comes on, and it takes a while for that inventory to get absorbed. And you can see this year the same trend is happening, although the distance from here to here seems a little wider. So it'll be interesting to see what happens over the course of the next few weeks and couple months in terms of that interplay between new inventory, supply, and demand. Another important item to keep an eye on is price reductions. And here we have the national numbers for price reductions. You can see at the moment we're sitting at 29.4, which is just below the 2019 numbers, slightly above 2018, well above 2020, but that was in the beginning of the heat of the COVID market. Now, an interesting thing to compare is last year you can see that price reductions were moving up sharply, and that if you look over here at the end of the year, it was at about 40%, which then starts here, and you can see we've been steadily trending down with price reductions because demand has been keeping up with supply, the reduced supply, and so sellers are not sort of forced into the position of having to adjust their prices. Well, I should say not as many sellers are forced into that position. Now, here are the numbers for Montgomery County, and you can see the seasonal ebb and flow, and year in, year out. You can see that in general, price reductions tend to move up after the spring market, and that was true to the extreme last year. You can see the slope was steeper and it was a much longer run, higher increase, and that those price reductions have fallen down sharply in the spring market. We'll have to see if this turns the corner, or when it turns the corner, because it will sooner or later. But for the moment, the numbers are pretty close to the historic norms, taking out 21 and 22 because those were unusual markets. But if you go back to 20 and 19 and 2018, we're sort of on that line of between 20 and 30%. Next up, we'll look at median list price on the national stage. So looking at sort of the seasonality of it, you can see what generally happens in the spring, what happened in 18, 19, and 20. The market moved up, and then you tend to get a little bit of a retreat in the fall. In 21, you can see that the slope was steeper. 22, even more so, and longer. So very strong appreciation. And then slid down. And now we're headed back up again for the spring, but the slope of the increase is more close to what you would see in a normal market. Now we'll pop over to Montgomery County. And as you can see, there's been a big move up this spring in terms of prices. Now, part of that, I think, is driven by the fact that if you look at the division, the tiers of pricing, there's been more new listings coming on at the higher end of the ranges, and so that pushes the median list price up. We'll have to watch and see how that impacts sale prices if the turnover on those upper bracket properties is sufficient to keep the sales prices up. But for the moment, the market seems to be maintaining its momentum. Buyers seem to have adjusted to the new interest rate environment. Inventory is still quite low, as you can see, and so there's enough demand to support the amount of inventory that's on the market at the moment. Now, given what's going on with debt ceiling negotiations and the dollar overseas and a bunch of other macroeconomic forces, we'll have to see how that continues to play out. But for the moment, the market still favors sellers, and sales are brisk, Average days on market are low, and the market is chugging right along. I'll be watching and letting you know and seeing how things change, because they will. They'll move up, they'll move down, and I'm here to keep an eye on things. If you'd like to see a recent video where I interview local elder law attorney Amy Griboff to learn more about wills and medical directives and other things like that, click here. And if you'd like to subscribe to my channel to see new videos as they come out, click over there. Have a great rest of your day, and I'll see you on the next one.